Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. Well, if you remember, I have done a video on crude oil prices when it was trading around $82 mark, and there was a buzz in the market that it will again hit $100 mark. And I've done a video that it will not happen, looking at the technical structure, that it might test around $54-55 mark again. And the initial target which was expecting around $65, and we are there now, and I still believe that $54-55 mark can be on cards for the US crude oil prices. And if we correlate it with the Indian markets, generally it is a say that it is negatively correlated to OMCs, oil marketing companies, because the falling crude oil prices impact their margins due to the inventories. But when you are trading or investing onto the OMC stocks, do you think that the falling crude oil prices or rising crude oil prices impact inversely? Let's look at the first chart over here. This is the Nifty, the OMC index stocks which I have taken: Reliance, IOC, HPCL, BPCL. And if I just look at the OMC index, equal weighted OMC index chart, comparing with the US oil prices, if you look at, they generally go hand in hand. Though the quantum of percentage rise, percentage fall may differ over here, but if I just look at the longer term trend, they generally go hand in hand. It was the only once during 2013, if you look at the box over there, during 2013 and to probably 2016, when crude oil prices were falling, that was the only time it has had a inverse correlation. But if you look at the historical move, they generally tend to go hand in hand. And again, there are various factors to it. And if you look at the equity markets, the way Nifty performs, the outperformance of energy, outperformance of other sectors into the Nifty, which will again impact the momentum on the OMC stocks as well. But if I just look at comparing with the oil prices, I see they are directly correlated. The move of crude oil against the move of, if you look at the OMC index over here, it's tend to go in hand. Now, uh, we have seen crude oil prices right from around $84-85 mark falling back towards $65-66 mark. Will it take an inverse or the equal correlation what the crude oil prices have? So let's look at over here the first equal weighted OMC index chart over here. So we have seen prices correcting right from the highs of around 10-15%. And if I look at the crude, it has corrected nearly 20-25% from the higher levels. As I said, the quantum of percentage fall and rise may differ over here with the crude oil prices vis-a-vis the OMC index. But here the OMC index are trading at very crucial support zone. If you look at the momentum over here, it has taken a breakout of a long consolidation. Similarly, if you look at the crude oil prices, tend to remain in a range for quite long, between $70-72 to around $80-82 mark. And the similar structure, if you look at the OMC, tend to consolidate in a range. We saw a breakout over there. Now it is retesting the over the, if you look at the index over, it is retesting the breakout level. This is very crucial. If you look at the 2019 highs, we saw 2020 fall, we saw a V-shaped recovery. The breakout happened in 2020, retested the previous 2019 highs, and again going higher now. So I believe still the if you look at the equated OMC index which we created, has a huge room to go on the higher side. Now, if you look at the RSI on the lower panel over here, this is again the weekly scale. And if you look at the 50, every time it hit 50, it tends to attract the buying levels. And we have seen again the prices going on a higher side. It was only once during the 2024, and again it was, I would not say that one sector has taken a hit, but it was overall market which has taken a downside and V-shaped recovery happened. But over here, if you look at, that was the one time where it didn't took support at around RSI of 50, but went on to the lower level. I believe again it is a time that it will take support at around 50 levels and might see a higher levels. Now, This is an interesting chart over here on your screen. If I just look at the historical move, back in 2014-15, it broke the previous couple of resistance zone, which were the previous highs. Similarly, we have seen now. Most importantly, during this 2014-15 momentum consolidation breakout, it took around 53 weeks to break out the previous highs. Similarly, now in 2021 as well, it took around 52 weeks, which is very, very similar. 53 weeks to 52 weeks. Okay, 1 plus 1 minus 1 week, we generally consider it as into the technical, because it might happen then during the day. Wednesday was the high and it broke out on probably Monday or Friday. The week might change. But here, if I just look at 53 weeks versus 52 weeks, the breakout is very, very, as per the time historic momentum, it broke out at right at 53 weeks, retested those levels and went on to the higher level. I believe this similar structure might help over here, and history might repeat again. We saw a 52 weeks breakout, we retested those levels now, and we might head toward the higher levels. So one should keep a watch. From a trading per se, I believe OMC might play a good bargain buying opportunity over here, and we might see higher levels coming onto it. And if you look at the momentum, Reliance, HPC, Alliance has been slightly outperforming into the momentum as of now against the Nifty, and we might see the higher levels coming onto the OMC basket. So keep a watch on it, and I believe that is an excellent trading opportunity one should definitely look at, and trade with 6 stop losses, because markets are very, very volatile. And if we remember, we have seen 6% intraday move last week, when Nifty opened with 17,000 to 17,300, and there was a huge ups and downs, or volatility was there. So 6% on intraday volatility is being very high, if you look at the Nifty. So I would suggest, if you are trading, trade with strict stop losses, and that could save your capital. If you are alive into the markets, profits will all come to you. So signing off, Brijesh Bhatia.
Our new research uncovers some shocking truths behind today's hottest investment opportunity: electric vehicles. Don't invest your money in EV stocks before seeing our research. Click here to sign up for our special event to know it all for free.